Hello guys, welcome back to my channel. My name is Femi. I'm a financial market analyst, trader, and I'm also a tutor. And today's video is going to be a continuation of our tutorial series on technical analysis. So in the past, you can check my videos to see market structure and some other um, tutorials we've done in the past. So today we are going to talk um, about candlestick patterns. So we need to get ourselves familiar with candlestick, then the components of candlestick, usefulness of candlestick, important candlestick formations you should always look out for on your charts, and lastly we are going to see the application of these candlestick formations right on a live chat. So without wasting our time, let me ask you, what do you understand by candlestick? So candlestick is actually the visual representation of what is happening in the market over a period of time. Exactly. We have two key players in the market. We have the buyers and the sellers. So these buyers and sellers often interact. They often interact in the markets, and their interaction is represented as candle. The kind of candle you see on your chart is the product of what is happening between the buyers and the sellers in the market over a period of time under which you are viewing the chart. And that is why we have two forms of candles in the chart. We have one for the buyers and one for the sellers. So without wasting our time, let me take us through the components of, of a candlestick. Okay, so let's look at the four components of a candlestick together. We have the open, we have the close, we have the high and the low. The open of a candle is actually the first price recorded within the time frame in which the candle is formed. Let's say this is a 1 hour candlestick. It means from the very first second of that 1 hour, the price recorded in the market is the open of the candle. While for the seller's candle, and mind you, the buyer's candle, which is a green candle, though you can represent it with any other color, but this the color that is popular for the buyer's candle. So it is referred to as the bullish candle, while the seller's candle referred to as the bearish candle, and is always represented in red color, though not compulsorily, but very common. So the open is the first price recorded in the market when this candle started forming, while the close is the last price recorded in the market while this candle is like is completing. Yes. So the low is the lowest price recorded in the market during the 1 hour formation of this candle, while the high is the highest price recorded in the market while this candle was forming. And for the bearish candle, the open is the first price recorded on the chart, while the close is the um, last price recorded in the market. The low is the lowest price recorded, while the high is the highest price recorded. So those are the four components we have for the two candles: the high, the low, the open, and the close. But for the bullish candle, you can see that the open is always at the low. The reason is because let's assume the price, the market, the first price recorded when this candle started forming was $2. So the market later went down, came back up, went up, and came down a little bit. And when it was closing, it closed at let's say $5. From $2 to $5, there has been an increment. So that's why the open price is always at the low, at the bottom, why the higher price is always the closing price is always higher than the opening price for bullish candle. Why for bearish candle the price open high while it closes low? The reason is because let's assume the price open at the price the candle opened at a price of $5, and when it was closing the last price recorded was $3. You can see that the close is lower than the open. So don't worry, over time you will get to understand this. So let's look at the parts of candlestick. You can see this tiny part is often referred to as the wick of the candle. You can see it, the tiny part. We have it at the top, we have it at the bottom. So it could be long. Sometimes some candles don't have it, but anytime you see this tiny part of the candle, it is referred to as the wick, or you call it shadow. So we have the upper wick for the two, and we have the lower wick for the two candles. While the body, the visible part, the part that has color, is known as the body of the candle. It is the distance between the open and close of the candle. So this is the body of the candle, while these are the wicks of the candle. So that's that on the components of a candlestick. So I believe by now when you see a candle, you should be able to label it, to identify what each part is, and in the candle. So let's go to the importance or usefulness of candlestick. So the excess of learning candlestick pattern is because number one, it reveals the market sentiment. Yes, it shows us the areas where we have buying pressure and areas where we have selling pressure. Number two, it identifies market trend and potential areas of reversal. Yes, when you spot um, this special candlestick formations of candlestick patterns, in some area it indicates that the market is about to reverse, or it also gives us the trend, or it gives us the trend of the market. That is, it tells us that the market is about to move in a particular direction. So it shows the trend and also potential areas of reversal in the market. Thirdly, it helps trader to get entry and exit confirmations. Yes, as a trader you should be able to put to have a confirmation on your candlestick before taking a trade or before exiting a trade. Then lastly, it helps trader to make informed trading decisions. That's it. When you see all these patterns, it helps you to know when to buy, when to sell, when to hold, and it helps you make an informed decisions. If there are other usefulness you think of, you can also add it in the comment section. So now let's move on to the main subject, the special candlestick patterns you should always look out for in the market. Okay, now so important candlestick patterns. These are candlestick formations you must always look out for in the market, because when you see them, especially when they are appearing on a zone or on a key level, or um, they can also appear on a trend line or on moving averages. It gives a very significant information of what is about to happen in the market. So you must always look out for these patterns. Though there are many patterns, different people with different, but I find I am able to I've been able to identify those that are very important to me, actually to me, and I believe if you can master these few ones, you would actually get to understand the chart better. So the first on the list, mind you, we have bullish candlestick, which I told you that it represents the buyer's candle, while we have bearish candlestick pattern. So we have this formation also um, for bullish and for bearish trend. So what is bullish, what is bearish, what is buyer, what is seller candle? Buyers candle, as you can see, the green candle actually shows that the buyers are the one um, dominating the market. They are the one in power. They are the one dictating the market. They are the one moving the market. Why the seller candle shows us it is the seller that are actually dominating the market. They are the one controlling the market. They are the one in power. So when you have this candle, it shows that the buyers and the seller interacted, but at the end of the time frame or the time of formation and completion of this candle, the sellers were the one that dominated. So they were able to push down the price. So why this one represent that? This one interpret that why this candlestick is being formed. The buyers and the sellers fought, they competed, and at the end of the day, the buyers overpowered the sellers, and they were able to dominate and push the price up, and that's why we have the buyers candle being printed on the chart. So the kind of candle printed on the chart shows who actually dominated within um, that time of formation and completion, which is the time frame of the chart. So for the bullish pattern, so when you see this formation on the bullish pattern are always strong, or let me say they are always effective when they appear on the support level in your chart. We've done market structure, so you should be able to understand what support, what resistance levels are. So these are important levels in your chart pattern. So when these formations appear on the support level, you should know that the market is about to go up, is about to start buying, is about to go bullish. While when you see this formation on this right hand side on your resistance level, not on the support, they are usually effective on the resistance level. When you see them on the resistance level, you should know that yes, the market is about to start selling, is about to go short, is about to be bearish. So the trend is about to go bearish. So I hope you understand. So the number one on my list here is the engulfing candle. So we have the engulfing bullish candle, and also the engulfing bearish candle. And from the word engulf, it means when you have a candle after being formed, the next candle that formed actually engulfs the last one. It overwhelms it, it covers it from the tail, from the upper wick to the lower wick. This candle cover every aspect of this candle. So that's an engulfing candle. When you see this kind of pattern on your support level, trust me, it shows that the buyers are now in control, and you should be looking for what? An opportunity to go long, to ride on with the buyers. You can buy. So that's what engulfing candle is. Why the bearish engulfing candle is, like I said, you should look out for this pattern on the resistance. When you see it on the resistance level, on the ceiling, sometimes I call it ceiling, on the resistance level, what it implies is that the buyers are no longer in power. They don't longer have the momentum, the power to push, to keep pushing the market upward. So the sellers have now taken the advantage to overwhelm them, and they've been able to overwhelm the whole of this bullish candle. So which shows that the sellers are now very strong in the market, and they can push the market down further. So in this case, when you see this kind of pattern on the resistance level, it shows that you should be ready to go short, to ride on with the sellers in the market. So number two on my list is the hammer candle. So we have two forms of bullish hammer and two um, forms of bearish hammer. You can see that the structures are very similar. They are the same, just the color and the positioning, like the orientation. So as you can see, when you have this kind of hammer like structure at the bottom of your chart, at the support, it is called hammer. And what it does is that, what the interpretation is this: the sellers were, after the market opened at this level, the sellers pushed down the market. They were the one in power. Then at a point, they got exhausted, and the buyers now set in, and they were able to push the price back, nullifying the effort of the sellers, and they were even able to push the price a bit forward. such that the price closed above the opening level. So in this case, it shows that the power now belongs to the buyer. So you should be, when you see this kind of pattern on the support, you should be ready to go long. You should be ready to go long. While you can also have it in this format, it shows that when the price opened, when the price opened at this point, when the price opened at this point, when the price open at this point, yes, this is a bullish candle and the opening is always lower than the close. So when the price open at this lower point, the buyers were able to carry the market to push it up before sellers, set in, and they offset the buyers effort, but they couldn't even override it. They couldn't, push it completely to give them a bearish candle. So this is still a what? A bullish candle, just that we have this, effect of sellers a little bit, but it couldn't even overpower the effort of the buyer. So in this case, when you have this kind of pattern on your support level, it still shows that the buyers are what? They are in control. They are in control, and you should be preparing to buy the market, to go long. So when you have this pattern at the resistance level, it is called hanging man. When you have it at the resistance level, it is called hanging man. At the support, it is called hammer, but at the resistance, it is called hanging man. It shows that the buyer couldn't, the market was going up, then at the resistance level, the buyers couldn't push the market further. So what now happened? The sellers set in, they set in and what? And push the market down, such that the let me explain better. This market, this is the open. So when the market opened, the seller pushed it down, but the buyers came in and pushed the price up, but couldn't, overcome the sellers. So the market closed below the open price. Don't forget that's a characteristic of a bearish candle. So you see that the candle is still bearish, but because it is happening at the support, at the resistance level, shows that the sellers are now in control and the buyers couldn't even overpower them. So you should be preparing for a downtrend. While when you have something like this structure, but at the resistance level, it is known as shooting star. These are patterns that are very common. You see them often on the chart. You see them on 1 hour, 30 minutes, on all time frame. Just look out for them. So when you have this at the support level, it shows that the buyers couldn't push the price further, up further. So the seller set in and pushed the price down, and they even overwhelmed and gave us eventually a bearish candle. So in this case, you should also be looking for a sell opportunity or for a short opportunity. So the third one on my list, we have the tweezer bottom and the tweezer top. From the word tweezer bottom, equal bottom. Look at the wick. This is the close of the bearish candle, while it is still the same as the open of the next candle, which is a bullish candle. So on the tail, you can see the rejection is almost equal, though sometimes it might not be fully equal, but it would be almost equal. So the two candles would almost give you the same size. So when it happens on the support level, it shows that the buyer are now coming into the market and they are about to reverse or change the direction of the market to the upside. So you should be ready to buy. So when you have the same pattern but on the resistance level, then what does that interpret? That the buyers are no longer in power. The sellers are now what? They are now going stronger. They are about to take control of the market. So it should be what? You should be ready for a reversal, for a change of direction. You should be ready to go short instead of going long. You should be ready to go short because the market is about to change its direction to the downside. So the next on the list is the doji candle. Doji can be so funny. We have about 4, 5, 6 dojis, but these are the important ones that you often see. In fact, doji simply means indecision. It simply means indecision. So when you have, in a situation where you have, I'll first talk about these two. These are um, they are not neither bearish or bullish. You can see them, they are neutral. You can see them at the top, you can see them at the bottom. Wherever you see them, just know that it signals that the market trend is about to reverse. So this is a classic, some people call it classic doji, some people call it star doji. So you can see that it looks like a star. You can see it. So it shows that the buyers and the sellers were in serious battle and they couldn't even, they have to settle it equally. So there was no winner. So in this case, it shows that the previous trend, let's say you have it at the support level, it shows that when the sellers sold to a certain point, they become so exhausted and the buyers were able to challenge them. And you know, the next, because it's appearing at the support level, the next formation is going to be what? A bearish, a bullish candle, which signifies that the market is about to change its course, its direction. So we have the long leg. That's when it is not balanced like this. When it is long, it could have a long leg. It could be a long head. Understand? So when you have it at the support, it shows that the market is about to reverse upside. When you have it at the resistance, it shows that the market is about to reverse downside. So it doesn't have a, these ones, they don't pick side. So, but for the one that picks side, that is also dodgy, we have the dragon dodgy. It is called the dragon dodgy. When you have this at the support level, what does it interpret? The market was at first bearish, but the buyers were able to offset the sellers power, and they had to settle for, at least if you can't take it down, we have to settle and put the market where it started. So the closing price is almost very very close to the worst, to the closing price. So at sometimes you might not even see the color, and sometimes you might see a little bit green or red. It could be green or red, but just that it must happen at the support level. So it shows that the market is about to go long and you should be prepared to also buy the market. Why this one? When you have it, it's called the gravestone dodgy. When you have it on the resistance level, it shows that the buyers, after the market has been bought, to a resistance level, they couldn't go further, so the sellers came in to challenge them and they had to settle for almost no winner no loser. So but because it is happening at the um, resistance zone, which is like the um, should I say, home base of the sellers. So because that's where the seller used to wait for the market, they wait for the market at the resistance level, while the buyers wait for the market at the support level. So it shows that the market is about to reverse down. So I hope you are getting it. Don't worry, we'll see all of this in the charts as we continue. So the next one on the list is the morning star. It is a morning star. So this is just a formation of 3 candles. So this one has to be bearish, and you see a very small, um I don't want to say insignificant candle, but it used to be small. The open and close is always very close. You see it in between. Then next you are going to see a very bold bullish candle. So when you have this on the support level, it is called the morning star. It shows that the market is now, the market decision now belongs to the buyer. So the buyers are the one controlling the market. Then it should be preparing to go long and ride with the buyer on the market. Why the opposite is what? The evening star. This is when you have the same pattern but different color. The last candle formed, the market was coming from the down to the top. The last candle formed was bullish, and after the bullish, the next candle that formed is so small, the buyers couldn't even take control. So the sellers are the one in control. But it is a small candle. But the next one that formed is a very bold bearish candle. So when you have this at the resistance level, it shows that the market is about to reverse downward. Then you should be prepared to also look for a short opportunity in order to ride with the sellers who are in control, because they are not the one in control. So the last one on my list, beyond this, we have the 3 white soldiers, we have, piercing, they have many other, but these are the ones that are actually very very common in the market, and they have been effective. They have been working well for me. So if you have any other ones you also use that has been working for you, can also drop it in the comment section so that we can all learn together. So the last one on the list is the Marubozu candle. Marubozu from it is a Japanese word that actually means dominance. It means dominance. So don't forget I told you that between the two players, the one that dominates will determine the kind of candle that is formed. So because of this green candle, you can see that it's as if no seller was even in the market during this period. It was 100% buyer. You can see there is no any wick on the candle. It doesn't have any wick. It was a perfect open and close. No, like the open was the low, while the close was also the high. No wick, no nothing. It's a very perfect candle. So it is called the bullish Marubozu. When you see this on the support level, trust me, just go and prepare to go long, because the buyers are now dominant and dictating the market. And for the other side, when you have it red on the support, on the resistance level, it is called the bearish Marubozu. So it shows that the seller are now the one in control and should be getting ready to ride on with them. So however, there are times I will have the weak no, that will be out, it will be out on the other end. However, the opening is closed, like very perfect. No element of selling pressure here at all, until when the market was about to close. So this kind of candle is still a Marubozu. Anywhere you see a flat end, either on one side of the candle or on both sides, it is Marubozu. So in this kind of candle, it shows that the buyers are in control and should be ready to go long with the buyer. So this is Marubozu open, because the open of the candle is Marubozu is perfect. So why this is Marubozu close? This is the open of a bullish candle. Why this is the close of a bullish? This is where the market opened and this is where it closed. So after opening, the market went down a little bit before, the price went down a little bit before the buyers took over, and they were able to close the market perfectly. So this is Marubozu close. So all of this, when you see them on the support level, it shows that the market is about to start going long and should be preparing for a buy opportunity. While the opposite is the case here, when you see them on the resistance level, you should be prepared to go short in the market, because the seller are now in control and you surely want to ride with the dominant force in the market. So you see, this is the open, this is the close. Don't forget, this is a bearish candle. The open is always higher than the close. So and when the market opened, it did what? It bought a little bit before it started selling. So the last price, which is the closing price, you can see that it is complete, it is perfect, it is Marubozu. So you can even use that term, when you want to say perfect, you can call yourself Marubozu trader, you're a perfect trader. So you're a complete trader. So you can see it. So that's that on today's lesson or introduction to candlestick. So I believe by now you should know what candlestick does. It represents the activities, the interaction between buyers and sellers in the market over a period of time. And the candle that you are seeing actually represent it represents the whole torso actually, but the color actually shows who dominated the market or who is in control of the market. So, and from this color we have combination of candles that give us formation, or we call it pattern. So when you see these patterns, they are very important, especially at zone. So they give us the idea of what is going to happen next in terms of market trend, market decision, market bias, and the like. So I believe you've learned something today. The bullish, the hammer, inverted hammer, hanging man, shooting star, the twister top, twister bottom, the dodgy candle, you know what it is, the morning star and the evening star. When you have it, this is a three candle formation. And lastly, the Marubozu candle. So let's go next to the live chart in order to see if we can spot one or two of these special candlestick patterns on the chart, and let's see the effect on the subsequent movement in the chart. Okay, now let's see one or two examples on At first, I'm going to use cryptocurrency pairs. So this is a BTC USDT, and this is under 1 hour chart. Don't forget what I told you. We have these two forms of candle on the chart. This is my chart, and we have the green and the red. The green represents the buyer's candle, bullish candle, which shows that the buyers are the one in control. So each candle represents what? 1 week. So the activities between the buyers and the sellers is in this candle is actually within 1 week. So this is 1 week, this is another 1 week, this is 1 week. So each candle here is formed and completed within 1 week. So now let's look out for, like I said, you can see these formations on all time frames, all available time frames we have. So now there's a minus structure here, so you can see a small pullback. So because of this small pullback, and then the markets, boom, started moving up. So we have this minor support here. So when you draw this the level, so you can see that at this point, and you can see that it also connect with the psychology level. I think I made mention of psychology level in the last video I made on market structure. You can see that I told you it is the level that is a rounded figure. You can see that this is 30,000 when BTC was 30,000 in 2020, 2021. Yeah, 2021. So that's around July 20. So you can see that this level is also a what valid level for us. So what do we have here? So you can see, if you zoom the market very well, the market chart, you see that this is a Marubozu candle. If you look at it, so, and it's happening on its what? On its support level. This is a Marubozu candle. Don't forget, this is not AMA. It is not AMA. Try and understand, this is not AMA. Don't convince this for AMA. So this is a Marubozu. You can see that it is a what? Perfect. This is Marubozu close. Bullish Marubozu close. So you can see, and what happened, you can see that the subsequent next 4 5 weeks the market was buying, it was bullish, because it happened on the what? On the support level, and it is what? A bullish indicator. So at this point, as a trader, when you see this kind of candlestick, then you should know that, oh, the buyers are now in the market. Then you should be preparing for subsequent, the following week you should be preparing for a what? A buy opportunity, in order to ride on with the what? With the strength under the coverage of the dominant force, which is the buyer. So you should be able to go long. So if you go long in this case, you would have made some profit, and this is a minor resistance level, so you could have gotten out of the chart at this level. So that's how it is being used. So you can also, at this support level, you can see this is a support, this is a resistance level at the top. This is where the market rejected. So when the market came back here, what happened? You can see that these candlesticks were so bold, buyers were dominating freely, very well. But at the support, at the resistance level, what happened? They began to have issue. They began to, the sellers that have been waiting for them came into competition with them, combated with them, and we've been having a series of indecision candles, which eventually at the end of the day, you can call this a dodgy, but I won't say it is a dodgy yet. But look at this last candle that pushed the markets down. You can say, what kind of candle is this? This is shooting star. This is shooting star. If you remember what we said in the video. So I don't want to waste our time because of our time. So I wouldn't. I might not have the time to be going back and coming forth. So we have the shooting star. Let me show you. Can you see? This is the shooting star here. So can you see that it is very similar to what we have here? So it's very similar to what we have here. And what happened? It was after this formation, what happened? The buyers, took in. And at this point, if I were you, I would be preparing for a sell opportunity, because I believe the sellers are now the one in control. So I'm covered to an extent. So, and is occurring at the resistance level. So I will be able to short the market. Don't forget, from before now, this has created a should I say, minor structure for us. So at this point, I'll be looking to get out of the market. If I take this kind of trade for the next 1 week, 2 week, 3 week, 4, 5, 6, for the next about 2 months or 3 months, 2 months or 1.5 months, I would have made a lot of profit on BTC shorting the market because of this candlestick formation I spotted at the support level. So look at this also. What kind of candle formation is this? If you can remember what we've taught earlier, this is evening star. This is evening star. Yes, I'll show you. This is evening star. Look at evening star here. So you have the green candle, then red small candle, then dominant red. So let's look at it here. Can you see the green candle, then small red, and the next was another bearish bold bearish candle. You can see, so this is a shooting star. And what happened to the shooting star? Don't forget, you see all these small structures. When you zoom to a lower time frame, you see that they are very significant structures. So they are minor structure because this is a weekly time frame, so it's a very high time frame for me as a day trader. So you can see that there's a structure here, minor support, resistance level here. So the market shut down. It shut down, and when it came down, you see, we always have these structures in between the charts, but like I said earlier, they are only effective only when you have them on the zone. Look at this. This is hammer candle. Was it able to change the direction of the market? No, because there's no any structure here. There's no any structure here. So we have the markets on we have the continuation of downtrend until the market started until the seller started losing the momentum, selling pressure. You see, so the buyers came in, and they were struggling, the sellers were still struggling, but at a point the market was indecisive, so it couldn't decide to go up or down. So the two of the buyers and the sellers, they drag it out for how many weeks? 1, 2, 3, 4, 5, 6, 7, for about 2 months. So the market, they couldn't move before the buyers now, at this point we said the market is said to have was a loss of momentum. There's no momentum in the market, no selling pressure, no buying pressure. It was a balanced um, um, serious battle between the buyers and the seller. So none of them was dominating. So at this point, it's always good to stay out of the trade. No need of trying to see what is happening next. In as much there's no dominant player in the market, just stay out of the trade, because as a trader, look for the dominant trader and ride with the dominant trader. That's the excess of technical analysis. Look for the dominant player in the market, either the buyer or the seller, and you ride on with them. So now, because of this structure, we've had the support here, minor resistance here. So the market broke, and still there's not much momentum. Just once in a while, you used to have this buy momentum, sell momentum. But at this level, because it was a support resistance here, so it has now become a support here. What do you notice? You can notice a series, a numbers of what? Dodgy candles, long leg candle. I hope you remember. Long leg dodgy. This is a long leg dodgy. This particular one, this one is a long leg dodgy, and this is a what? A star dodgy, or you can call it, you see, it's also here, a star dodgy. You can also call it classic dodgy. You can see, so dodgy actually, and when you have dodgy in the market, it shows that nobody has the power. So anything could happen, but because it is happening at the support level, the resistance that turned to support, it has become what? It has given us an hint that the seller are what? Finding it difficult to push the market further. So until we have what? A bullish candle that gives us the sign that okay, now the buyers are now coming into the market. So at the end of the day, what confirmation do you have here? You have a open bullish um open bullish, okay, a open bullish marubozu. So you can see that we have, sorry, let me just keep my head. You can see that we have a open bullish, can you see open bullish marubozu? I said it's actually indicate that the market is about to go up. You can see that that's what we now have here. So it is a confirmation that yes, the market is about to start going up. So after the open bullish market, what happened? You can see the market rallied up. In fact, it was a crazy rally. It was a very crazy pump. So till 2024 March, you can see. Then on 2024 March, what happened? The market gave us a new resistance because the market rejected from this level. So now, don't forget what kind of, this is a shooting star. So after this formation, you have sellers. Though in this case, this you might not really get the picture of the formations clearly at this, because this is supposed to be a pullback, but it's a short pullback. It is a short pullback. So the formations at this resistance level are not strong enough to push the market, down. So what happened? The market, after creating this new low, which is higher low, it rallied up. So that's just how to apply the um, patterns on your chart. So you can see this. What kind of rejection candle is this? This should I say shooting star? This is a shooting star. So after the formation of this candle, um, in January, yeah, third week of January. So I expected that the market should sell. And see, I've been looking for a short opportunity in the market even till now. But because of this level again, which the market is actually interacting with, and besides, there's no momentum in the market, and that's why you're not having um, significant trade opportunity on BTC in the last 2 weeks. You've not really had a significant trade opportunity in the last 2 weeks. So pushing, I've zoomed the chart down to daily time frame. You can see this is daily time frame. So you can see what candle is this, what pattern is this. You can see this is a long leg doji. So where is it happening? It's happening at the resistance level, weekly resistance level. And what happened after the formation? You can see the strong sell pressure, So this one has not gotten to the zone clearly, fully. That's why it's not strong, but at least you can see that it pushed the market up a little bit. It's also dodgy. So you see dodgy very well. This is engulfing candle. You can see it covers the whole of this clearly, perfectly. It covered it clearly. So this is an engulfing candle, and it was able to push the market down. So this is a rejection candle. All this kind of rejection candle is always difficult to trade them. So what kind of candle is this? It's supposed to be an hanging man because it's happening on the resistance, but the market broke through, and mind you, all of this is not always 100% effective, but at least it's very, very effective, highly effective. And that's why you must always apply your risk management anytime you are trading in the financial market, because nothing is guaranteed. So can only give you an indication. Look at this. What do we have here? We have shooting star. This is a pure shooting star here. On the weekly, this is a pure shooting star. This is a pure classic doji. If you look at this is a pure classic doji here, and it pushed the market down before the market reversed. At least you would have shot the market to this level, and this one would have helped you shot the market back to this level again, which is what the shooting star. So these are the structures we have. So let's look at another structure on Forex. Let's see the application on Forex. So we'll be using GBP USD as an example. Okay, welcome guys. So this is EUR USD. So this is EUR USD on weekly, on daily time frame. You can see this daily time frame. So each candle you see here represents the day price action in the market between the buyers and sellers and the outcome. So Now I've already drawn my level. Like, if you know the way I analyze, the first thing I do is I draw out my levels right from higher time frame to lower time frame. So on the weekly time frame, so you can see that we have a resistance here, and at this resistance level, what do we have? We have this rejection. This is not actually hammer. This is not hammer, but this is a should I say shooting star? But because of this rejection, it would have been a perfect shooting. Yeah, it would have been a perfect, not a shooting star, sorry, evening star. It would have been a perfect evening star for us. However, we have a combination of dodges here. We have dodgy. All of these are, this one would make you careful and get ready for a sell opportunity. I can see the market sold right to this point, and at this point you can see, what do we have here? We have a what? Small hammer candle. Another dodgy. What kind of dodgy is this? If you can remember, this is a dragon dragonfly dodgy. This is a dragonfly dodgy. So you can see it pushed the market up before we have a Marubozu bearish close open candle, so which pushed the market down back to the weekly support. So this has been the case, the application. So okay, let me show you. I am actually having a only chart on euro. So why did I take this chart? Okay, look at this. What kind of formation is this? Don't forget, we have gravestone dodgy, we have dragonfly. This is a dragonfly dodgy. So you see that it flew the market. And after the dragonfly dodgy, what confirmation do you have again? You have a Marubozu bullish close candle here. So, and the market rallied up. So these are the candlestick formations you look out for on your zone before you make a trade decision. Look at this. This is a shooting star. So just try and get yourself familiar. Open your chart. Look at the chart very well. Why did I get into the market on this on Euro USD? Because of this dodgy. Look at it. This is a classic dodgy, and it's happening at the resistance level. And after I didn't get in. You don't get in during the formation of the candle. You allow the candle to completely form, and now the next candle must give you a confirmation that the market has begun the 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 how should I put it? It has confirmed the formation you spotted. So I spotted this dodgy on the support, on the resistance level, weekly resistance level. So I knew it was the market would reverse actually. So that was on Monday. So on Tuesday, I did what? I After the market came up and got to this level, I short the market. So you can see the market sold and sold back to uh, this daily structure. So you can see there's a small resistance level here. You can see it is a level. So there's a small resistance. So I expect the market to reach this level. So that's how to um, interpret the candlestick on the charts. And subsequently, by the time we start our live analysis, where we'll be doing the weekly analysis on cryptocurrency pairs together, you'll be seeing more of application of all these Marubozu, Dragonfly,